Hi, I'm Jarrett Davis and I'm one of the only active Forex fund managers to share their techniques with retail traders online. Now, first of all, I want to thank you guys very much for your questions, comments, posts, to all the free content we've been posting online, the daily trades, the weekly analysis, the economic news analysis. All that stuff is designed to help you guys become more profitable in the markets and just give you an insight into how I'm trading my own account, okay? So, what we're going to look at in this video, we're going to address one of those questions, we're going to try and answer it and help you guys get a better understanding of, how to kind of view the market. The question we're going to look at today is how can you determine or how can you identify correlating pairs and what that means, okay? So we're going to talk about the concept of correlating pairs. So what correlating means is that when one pair does something, the other pair does something the same. Or when one pair goes up, the other pair goes up too. Or when one pair goes up, the other pair goes down. So basically they kind of mirror each other either inversely or as an exact correlation, basically. Okay, now there's a few currency pairs that do this, but generally it's the currencies that tend to correlate or inversely correlate one another. Okay, and we're going to explain what I mean. One of the biggest common examples is the euro and the Swiss franc. Now the euro and the Swiss franc are very close together geographically and they're very interlinked economically because Switzerland does a lot of business with the eurozone, it's its biggest trade partner, etc. And of course, if anything bad happens to Europe, Switzerland's bound to get affected, okay? So if the euro goes up, very often the Swiss franc will go up and vice versa. If the euro goes down, very often the Swiss franc will go down. And that's just simply explained by the fact that they're very closely linked. Now it's very important to understand there's no set rule, okay? There's nothing that says it has to last forever. And any currencies that are correlating currently could completely uncorrelate at any time, okay? So if you're thinking about taking advantage of that correlation, maybe you've seen the euro go up and the Swiss franc hasn't moved, you could place a bet maybe that they will follow, okay? Or maybe the euro move will be short-lived. But in my opinion, it doesn't really make much sense to try and trade purely based on correlation, okay? You want to trade it based on the fundamentals, the things that are driving those currencies. And just because the euro's gone up doesn't actually really mean that the Swiss franc should do anything, okay? So if you focus on correlations too much, in my opinion, I feel like you're going to struggle to succeed with that tactic, okay? Now another example is correlation across pairs. And this happens when one currency is particularly strong. So for example, if everyone's buying the pound in huge quantities, the pound dollar will go up, the pound yen will go up, the pound Swiss will go up, the pound Aussie will go up. All that you'll see the pound pairs all rally. It doesn't mean those rallies are going to last, again, because maybe the Aussie dollar is much stronger than the pound and the move will be tempered and the traders will buy it back. Maybe the pound Swiss is a really strong pair and the Swiss is a really weak currency. That will actually keep going. So again, it's very difficult to just trade based on purely on a correlation, okay? But that's what a correlation is. It does happen in Forex. You do see it play out on the charts. But in my opinion, my advice would be to not try and base a strategy solely around the correlation of different currencies. So I hope that's helped. I hope that's given you a little insight into how I trade, and I'll be back with another video shortly answering more of your questions. So please keep the comments and questions coming because it's great content, and hopefully I'll be back to help you guys make some pips.